Okay, now let's move on to investing activities. So these are the cash flows that are related to your non-current assets. For example, if I buy non-current assets, okay, there will be a cash outflow, okay, for payment for non-current assets. Because when I buy non-current assets, I need to pay the money, right? So there will be a cash outflow, okay? And there will be an cash inflow, okay, when I sell my non-current assets. For example, if I have motor vehicles and I sell it for 500,000, so I need to record it under my proceeds from disposal of non-current assets. Okay. And next will be cash flow from financing activities. So under financing activities, any cash flow that is related to your equity and non-current liability need to be recorded in under financing activities. For example, if I obtain bank loan, okay, if my bank loan is approved, okay, the bank will give me money, okay, so there will be a cash inflow, and this cash inflow is called cash flow from loan from bank, okay. And the next one will be cash from issuing debentures. For example, debentures is a kind of non-current liability, okay. If I issue debentures, okay, other people will give me money, okay, so there will be a cash inflow, okay. Next will be issuance of share capital. So if I issue shares, public give me money, there will be a cash inflow as well. Okay. Now for cash outflow, okay, we have these few items. For example, if when our debenture is matured and we need to repay them back, okay, there will be a cash outflow because we have to repay our debentures. Okay. Next will be loan repayment. Same thing. Okay. If our loan is due and then we need to pay them back, right? So there will be a cash outflow, okay? When we pay dividends to our shareholders, okay, something to do with our equity. So when we pay dividends, okay, there will be a cash outflow. And lastly, when we issue shares, there will be share issue costs, okay? So share issue cost is a kind of cash outflow as well. So all the items here are related to either your equity or your non-current liability. Okay, so you need to read the question carefully. And lastly, there are 5 items here that you need to disclose separately. So the first one is income tax paid, interest paid, dividends received, dividends paid, and interest paid. Okay, so basically there are 2 interests, 2 dividends, and 1 income tax. Okay, interest received, interest paid, dividends received, dividends paid, and lastly, income tax paid. So for income tax paid, you have to classify it under operating activities, and there's no any other alternative. Okay. For interest received, you can either put it in operating or investing. Dividends received, either operating or investing. The interest paid, either operating or financing. And lastly, dividends paid is either financing or operating.